Hi, I've kept studying and really your material is great. Thank you so much. Just a quick question. Have you ever thought about applying the same crypto trading principles to trading Forex? So yes, I absolutely have, but I have been burnt so heavily on Forex, so I have just completely abandoned it. So let me explain. So a lot of the stuff that you see, anything to do with Forex, they're not real. Like most brokers which offer Forex trading, then it's not real futures trading. They're trading CFDs, which stands for contract for difference. So in a real market, the way that the trading engine works, it's like an auction, right? So we've got, let's say, the price of Spicy Coin. So let's look at the order book for Spicy Coin. So we've got on the left, we've got the price, and then on the right, let's say we've got quantity. So we've got 10, 11, 12, we've got 9, 8, 7. There we go. So this is the different prices of Spicy Coin, and let's say this is how much liquidity in limit orders is available at that particular level. So let's pretend that we've got $100 available at 9. We've got 1,000 at 8. Let's say we've got 200 at 7. Then at 10, let's say we've got 100. Let's say 1,000 and 200. So this is just a normal order book, and let's say the last traded price is 9. Okay. So from here, if I was to say I want to market buy 10 Spicy Coins right now. So what will happen? Your market buy will be matched with the best available limit sell that is currently available, which is $10. And you will go and buy the $10, like your market order will just automatically be matched with this limit order, right? Very normal practice. If I was to market buy 110 Spicy Coins, what will happen? I will eat through all of these, and then the last remaining 10 will eat through whatever the next best available order is, which is 990. And it will look something like this, right? So this is like normal, like how a normal trading engine will work, right? And it's fair. Like it makes sense. It makes logical sense. Now with CFDs, it's a little bit different. It doesn't work like this. When you execute an order, like if this was not a normal, like if this was not a futures market, but if this was a CFD market, and let's pretend that I'm the broker, and you say, I want to buy 10 Spicy Coins. I basically have the option, me as your broker, I can give you whatever price I feel like it, regardless of what's actually on the order book. I can give you whatever price I want. That means that even though there are people literally in the queue with limit orders here at $10 and at $11, I can literally say, yeah, I don't really feel like giving you this price. I'm just going to have your trade execute over here because I just feel like it, right? Because what's happening is when you put in a market buy for $10, what your broker can basically do is your broker is going to go to the futures market and market buy 10 Spicy Coins at $10. So that's like what's on the futures order book. And then they will instantly give you, let's say, 11 for your market buy. So they're perfectly hedged. They are perfectly hedged, but they instantly capture the spread between the price that they got, but then they add a little bit of a premium to whatever price that they got, and they add it to your position. And the same goes when you close out of your position. When you close out of your position, first they close their position, and then after they close it, they add a little bit of a spread to whatever they got, and then that's the price that they give you. basically they are trading futures on your behalf, but they just pocket some extra cash. And the size of the spread that they wish to screw you for, they can go and edit this or adjust this whenever they feel like it. So they can go and advertise on their broker. They can say something like, "Oh yeah, our broker is awesome. We have a 1 tick spread on the Euro USD pair. Look at how awesome we are. We only have a 1 tick spread." But then when a bunch of volatility comes out, they're going to be like, "Oh, well, it's quite volatile right now. So we're just going to right when like when price is coming close to your stop loss. So let's say you just hit a breakout in the euro dollar, and let's say your stop loss is here, and price is coming down to your stop loss. Right before your stop loss is hit, they can say, "Oh, well, we're going to just casually just bump the spread up by 20 ticks. And even though your price is nowhere near touching the stop loss, you've already got stopped out." Like, so they close you out of your position here, and then it will say in your order history that your order actually got executed here, even though price in the market didn't actually reach that point. Quite predatory. Another thing that they do, and this is real, they actually do, like CFD brokers, they actually do this. So you might spot that someone is flashing a very large order on the broker's order book, like literally on their order book, not on the futures order book, but on the broker's order book. And let's say someone is flashing that they're willing to sell 1 million of a certain coin. And let's say on the next price, there's only 1,000 available. So you say, "Okay, cool. I'm going to market buy 2,000 of these coins because I clearly see that there's 1 million. And after you click market buy 2,000, what happens? It skips the 1 million. It executes against 11, and you eat all of the available supply at 11. So you still have 1,000 more coins to buy. So you have to buy the next 1,000 from whatever the next best price is, which just so happens to be 12. So you eat some of that, and it will show as, so you've eaten through that, and now we have 1,000 left on 12. But the strange thing is that on their candlestick chart, you will not see a wick go up to 12. It will remain at 10, and they will even show that there are still limit orders available at 10. And then when you go into their customer support chat and you like give them the screenshots of all the orders and you say like, "Hey, what the hell is going on? Why am I being like, first off, why am I being executed at 12 instead of 10 when there was clearly limit orders available at 10? And then secondly, why did the price action chart not update and show that because there's supposed to be a wick going up to 12? Because the last traded price was literally 12. So it should show on the candlestick that I wicked this candle up to 12. But I didn't. The highest point in the current candle is still 10, even though my order got executed at 12. What is going on? And their answer will look something like this. They will say, "Oh, well, sorry about that. You see, on our broker, we actually have 2 different order books. We have book B and we have book A. And the order book that we show on our front end when you use our broker is book B. And we have a different order book which we put that we put some clients on at our own discretion, and we don't give you any warning beforehand that we're moving you to a different order book, and you can't even tell if they've done this." And basically the reason why they do this is because if you are a profitable client with a Forex broker, they don't want to be trading against you. And they either want to be trading with you or they just don't want to take your orders. So it's basically their market maker being like, "Yeah, sorry, we want people to fill our limit orders. It's just not specifically you." So can you imagine, like, can you imagine that someone is selling an iPhone for like $1,000 on eBay, right? And you say, cool, I'm happy to pay this. So you click buy, and your order gets rejected because the owner of this iPhone is like, yeah, look, I'm happy to sell my iPhone to $1,000. It's just I don't want to sell my iPhone to you.